What's up, guys? It is January 19th. It's 2:03 p.m. and this is the Crypto Newsletter. So starting off, Skybridge Capital founder Anthony Scaramucci says long-term investors should keep a 3 to 5 year time frame and ignore day-to-day price movements. The time to invest in crypto is now. And he said it's because we're closer to the bottom than we are to the top, and that's for sure. And I agree with that. But as well as keeping that long-term outlook is definitely very necessary. And like the space isn't going away. And it's just about being in the crypto assets that are here for the long run that are providing that utility instead of speculation. So then we have this. Circle Uniswap research says DeFi can solve $2 trillion foreign exchange risk problem. A paper by researchers at the digital assets firm says DeFi and blockchain technology could also reduce cross-border remittances costs by $30 billion a year. That's huge money. And as we already know, we have Stellar for remittances. We have Ripple for remittances. So those two companies are the ones that have been working on that problem, cross-border remittances, for a very long time now, and definitely in partnership with Circle as well too. You have Stellar USDC and everything like that. All right, now we have this. No point to EU's crypto rules unless world follows suit, senior EU official says. FTX's collapse may have added fuel for those seeking stricter crypto rules, but even the good guys may get it wrong, Financial Services Commissioner said. So let's roll down here. New European Union crypto rules are pointless unless the rest of the world follows suits. The bloc's leading financial services told CoinDesk. In Switzerland, to attend a gathering of the World Economic Elite, said recent crypto market turmoil had given extra ammunition to those pushing for a global rulebook, but warned future crypto innovations need to be focused on people. It's great that we can say that the EU is the first major jurisdiction in the world to regulate the sector with its landmark micro-regulation. But there's no point in Europe being on its own because this is a global development. We can't put barriers on it. And it's so true. If like one country does strict regulation, but the others don't, then that country is putting themselves at a disservice as far as innovation goes with this new internet of value. So that's on point, that statement. So the world is going to have to be an international framework. So running ahead, even once MiCA takes effects around the start of 2025, it won't be the end of the story. Crypto evolves quickly and we'll have to tweak what's in place. We need to get our hands around all this. DeFi, you can ask the man or woman in the street what this is, and really they don't know. So we need to be very careful that we're not running ahead of ourselves. Very true. So let's keep moving. Oh, actually, one more thing. If I were in the financial system, I'd be thinking, how do we avoid that disconnect from our customers? The excitement around technology is super wonderful, but don't underestimate that it has to be human-centered. Then we have Bitcoin's hash rate hit an all-time high this Monday, despite the price being down 70% from its top. And wow, this is a chart from all the way back in 2009 when Bitcoin first started. And you can just see here that hash rate has just gone up and up and up. I wonder when this date was. So blockchain.com/charts, maybe we can see that date. And if we can find a correlation with the hash rate to the price. Total hash rate right here. All right, this is what we got. So this is a monthly or a yearly look. Let's look at the past or all time. So yeah, when we see a fall off in the hash rate, usually price does coincide with that. Even right here, fall off in the hash rate, price coincided. But there's been a divergence ever since 2019 when we went down, hash rate went up, and then we fell right here. That was on point with that. Hash rate's gone up. All we've done is gone down. Price usually has to catch up to that. And even just looking at, and if I can hide that, dude, look at that chart. I mean, as you can see here, you have one bottom, two bottom, three bottom, just like right here. You had one bottom, two bottom, three bottom, and then you go. This is obviously more elongated than this, but it's just time for the market to turn around here. That's why kind of getting stuck in the day-to-day at a crypto market bottom, I don't think is the right call. I think now's the time to be a little more greedy than fearful. I know there's so many reasons to be fearful right now, but there's a lot of signs telling us that the market bottom is in. All right, then we had this. Building something like this is climbing a mountain. Circles, Jeremy Allaire says, but you don't know how you're going to get to the top. So he talked about future stablecoins. Let's hear what he's got to say.
It's 2023. It's 10 years since Circle was founded, and looking back at the company's performance over that time, it's been quite a wild ride. And maybe killer interesting moment. Like, what are the lessons you've learned? I mean,
that culture of trust and transparency, and that plays itself out. pays dividends, and it
even,
matters.
Even as you're pivoting all the way as you go, right?
You have to be able to pivot. As I like to say, and actually it's a good backdrop here in Davos, is it's climbing a mountain, right? And building something like this is climbing a mountain. You can see the mountaintop right over there. It's a beautiful mountaintop, but you don't know how you're going to get to the top of the mountain. And in fact, you're going to go up one part and you're going to be like, there's a cliff. I don't want to fall off. I got to pivot and go back down, and then I got to go back up. And so climbing a mountain is a really good metaphor, I think, for building anything great. And I think that's been, in some ways, the story of the past 10 years.
Well, it's 2023. It's 10 years since...
And it's so true. Even in life, you have to be able to adapt. You can never get so comfortable or complacent. When you're trying to do something great or something big, you got to be able to adapt to, the market or to the feedback of what you're getting. So that applies to like everything. Even with us trading, when like something could look like something one day, but then we get new price data for that day. Now we got to kind of change our tune. If the price data that came in is different for what we were looking at the day previously. So with trading, any market, you have to be able to change with the price data that comes in. It's never set in stone. That's the beauty of it. So let's keep going. Binance CEO says many crypto players get distracted by money. Said it's important to focus on the technology. So those in the crypto industry should focus on the fundamentals of crypto technology rather than get distracted by the money in the sector, he told the audience at the World Economic Forum. When the tide recedes, all the hype goes away and it's the fundamentals that matter. In our industry, we're so close to the money, so many people get distracted by that. It's all they focus on. So they released the Proof Reserves report. We actually need to proceed slowly and carefully and steadily. So that we don't cause major disruptions. It's not about any single coin, blockchain, or exchange. It's the fundamental technology that's being evolved and will continue to evolve. All right, next up, we are building outside of the US very rapidly, given the opportunities we see. Ripple's Brooks and Twistle says, we're not going to try to chase shiny things this year. Plus, he shares Ripple's approach to helping develop CBDCs worldwide. Let's hear it.
We're building outside the U.S. very rapidly, given the opportunities we see. But we're not going to go kind of off-piste and try to chase shiny things this year. There's no room or time for that with this kind of environment.
In terms of, you mentioned CBDCs is on your radar. How are you helping out with that?
Absolutely. We have an interesting approach. We realize we're not going to solve that problem for every single central bank around the world. We're very targeted. We found great interest in some of the smaller central banks around the world that are looking for a strategy, looking for a partner, looking for a technology, a side blockchain, ideas about how to go about this. So we had our first MOU signed with the Kingdom of Bhutan in my neck of the woods back in Asia. Palau is an example, but we're in conversations with dozens of central banks around the world trying to figure out the best way to help them across this goal.
They want to develop it?
They want to use technologies that will help them help their own citizens. And so we don't believe there's any one solution for all these central banks in this technology across the world. There's places we can play. There may be a side chain to the XRP ledger. We may help in the interoperability across this, but it's going to be different at every single central bank.
There we go. I love how we sidestepped that question. That was good. All right, let's keep going. We have tomorrow, 9:30 a.m. This was yesterday, so this happened today. You had HBAR and a couple other people and moderator Mike Casey for the sustainability use case for blockchain from Davos. So this already happened. There's no video here, but I wonder what resulted from that. We're going to do our World Economic Forum, Davos, keeping up with it kind of video. We missed yesterday. Was not feeling too good yesterday. I'm sure you could hear it in my voice today, that a little sick, but all good. We're going to cover it today though. So we'll catch up from yesterday. We'll do two. We'll combine from yesterday and today. So that will be the next video that comes out today. Then the ECB. What might a digital euro look like? Would it be safe? Are we going to develop one? Our digital euro project team discussed these issues with civil society organizations representing people and businesses. Tune into the discussion here. Let's see. This is 57 minutes. So we're not going to cover it. 57 minutes. We're not going to cover it, but I'll dive into it separately on my own and see if there's any nuggets of gold in here that we can take out of this. So I'll make sure I save this. And if I find anything in that, we'll cover it in the Davos update. Then we have this. Crypto and blockchain are on the promenade. I love that word. At Davos 2023. So let's see. Well, first off, I saw right at the beginning, Casper Labs. I didn't know they were there. You got, all right, Accenture, Luca, Copper, digital asset, Ripple, Avalanche, other ones in here that we know. Hyperledger, I mean, and then looks like Polygon, or is that Chain? Interesting. Or no, that's Hut 8, but it looks like Chain's logo and Polygon's logo a little bit. Let's see what else we got. Circle. We got Polygon. MasterCard's there. Bitcoin, Plan B. Oh, there it is. Casper Labs. We got State Street, Amazon, Coinbase. Someone with a Bitcoin Lambo or Bugatti, Meta. Filecoin, baby. Anthony Scaramucci. Yeah, there we go. All right, let's keep going. Davos 2023 is a buzz with the post-FTX real-world use case, like we've been saying, for the sustainability use case for blockchain. So this was, I think this is what HBAR Foundation, Protocol Labs, which I believe is Filecoin, International Emissions Trading Association. That's interesting. Ava Labs. There we go. Now let's go to this. Crypto giant QCP Capital expects Fed to be irate as financial conditions ease. The recent risk revival in traditional markets and cryptos may not sustain because the U.S. Central Bank is still fighting inflation, the Singapore-based crypto options trading firm said. Don't fight the Fed has been one of the most voiced mantras on Wall Street. That's precisely what investors have done in recent weeks. Despite the Federal Reserve's repeated warnings of continued liquidity tightening ahead, there's been a risk revival in almost all corners of the financial market, including retail-dominated meme stocks and dog-themed cryptocurrencies. What will raise the FOMC's ire is how quickly financial conditions have loosened in this period, which, together with the rally of meme stocks and cryptos, risks severely derailing their inflation fight. While we expect the February 1st FOMC meeting to push back strongly against this pricing, we believe the March 22nd one will be the moment of truth, when updated rate forecasts will be released. Should there be no adjustment to the median 2023 dot plot, then we expect markets will be in for a rude shock. The Singapore-based options trading giant is one of the few firms that warned of a Fed-induced market swoon before it began in late 2021. The central bank raised rates from 0 to 4.25% last year, plans to lift them further this year to levels above 5%. The interest rate dot plot published by the FOMC shows the median rate. The Fed expects financial conditions to tighten when fighting inflation with liquidity-sucking measures such as interest rate hikes. Financial conditions tighten when bond yields rise. Credit spreads widen. Stock prices fall and the U.S. dollar strengthens. However, and that's why we look at the bond yields. We look at the dollar. We look at all these things when we're looking at the crypto market and our market updates. The dollar index, which tracks the greenback's value against major currency, has dropped 11%. We called that top since late September to the T. The S&P 500 has bounced 12% in 3 months, while the 10-year yield treasury has fallen by nearly 100 basis points to 3.38%. Other risk assets, such as Bitcoin, the leading cryptocurrency by market value, has gained over 25% this month. If that's not enough, Shiba, self-proclaimed Dogecoin killer, has rallied 35% this month, and we nailed that Femex trade on our live tutorial the other day. And then if we go down here, the excesses of the prior inflationary regime are starting to reemerge. The meme stock basket is now up 25%, while altcoins like Solana have doubled in value in less than a month. Total NFT market cap has quietly crept up close to last year, high levels of 9 to 9.5 million ETH. And while we wrote in our first market update of the year that NFT prices were a harbinger for a broader rally to come, we did not expect those to be sustained while the Fed is still on a war path against inflation and all the assets that feed it. There we go. But while the Fed is likely to stay hawkish, the U.S. Treasury Department's decision to run down its cash holdings to avoid a government shutdown may damp the Fed's tightening to some extent in the coming weeks. That's why I believe more of a market melt up round 2 is underway. You can feel it. So there we go. Now let's keep going. All right, we got the UK Trade Groups Association. They see opportunity in document bill under debate in Parliament. The legislation could enable blockchain technology as a way to store documents. The UK Electronic Trade Document Bill was described as a great local and global opportunity by trade association representatives testifying in Parliament on Thursday. Currently under debate, the bill could enable blockchain to be used as a way to store trade documents electronically. And under current regulations, these documents need to be kept and transported in paper form, which can be a cumbersome task. Geez, that's like using a typewriter with a computer nowadays. Tests have proven electronic documents can be transported in minutes, as opposed to the current system where they must pass through numerous parties. This bill provides a lot of opportunity for business. It's a $1.2 trillion opportunity for the Commonwealth and an association consisting of 56 countries. He called the proposed law a template, one that could facilitate talks with countries like Singapore, Canada, Australia, and New Zealand, among others that are considering their own versions. There we go. All right, nice. All right, so let's go to the next one. Ransomware variants are on the rise, but overall gains decline. Victims appear to have become less willing to pay, according to a new report. In 2022, ransomware hackers, there was a lot of it, but people are becoming less willing to pay for the ransomware attacks. And we saw some stuff out of the World Economic Forum about that cyber pandemic. We'll cover that in the follow-up to tracking Davos. So first mover America's BTC ETH drop amid Genesis bankruptcy reports. So Genesis Global Capital, the institutional crypto brokerage, is laying the groundwork for a bankruptcy filing. Genesis is in confidential negotiations with various creditor groups, with the company warning it could see bankruptcy protection if it fails to raise capital. Since the collapse and bankruptcy of crypto exchange FTX in November, Genesis has been scrambling to raise fresh capital or reach a deal with creditors. Digital Currency Group owns both Genesis and CoinDesk. Then we had the Bits Lotto, and the exchange was accused of laundering $700 million by U.S. authorities on Wednesday. Binance was named as the top 3 receiving and sending counterparties associated with it by FinCEN. Approximately 2/3 of Bitlazo's top receiving and sending counterparties are associated with darknet markets or scams. So that, that's no good for Binance. I mean, they're just repeatedly on the Department of Justice's radar, and I wouldn't be surprised to see eventually some action being brought to Binance, which could be a potential gray swan event because it's something that a lot of people are expecting. So the chart compare. All right, let's keep going. So first moving America's crypto winter chills at Digital Currency Group. Coinbase. Top stories. So we know that Coinbase halted operations in Japan. The Digital Currency Group is suspending its dividends. So we know that. Now this, in Davos, blockchain yields more promises than problems. A United Nations official makes the case for the underlying technology behind cryptocurrencies. About half the estimated 500 companies attending the 2023 annual World Economic Forum event are technology companies and startups. You see them stretching out over the promenade and the main street running through the city center where all the action happens. The showcases are demoing products and services in blockchain technology, artificial intelligence, virtual reality, robotics, 3D printing, and the Internet of Things, offering a taste of the latest and greatest to come. I mean, right there is the 4th Industrial Revolution in a nutshell. One of the most notable topics being discussed on panels at events over live broadcasts is the future of money. Of course, when talking about the future of money, you must also mention crypto. The conversations I've overheard or been a part of so far have concerned the pragmatic using blockchain for traceability, the political using blockchain for anti-corruption, the futuristic decentralized finance in the metaverse, and the hopeful incentivizing climate action through Web3. So he's the controller and director of the United Nations International Fund for Agricultural Development and a regional ambassador of the Global Blockchain Business Council. So they did a 2023 global risk report, cited technological disruption as a top risk. With the high-profile bust of major crypto firms still fresh, there is pessimism among many in Davos about crypto. As well as being a tech enthusiast, my day job is working in finance and innovation for United Nations. Let's keep going down here. So it's important to make the distinction between blockchain, the technology behind cryptos, and crypto itself. Decentralized digital currency as a concept is not going to disappear, but cryptocurrencies that are not backed by real assets in a significant way will likely not survive. We're going to see fewer industry players willing to take the financial and reputational risks of being exposed to crypto. However, blockchain as a technology will continue to grow exponentially and its use cases expand. The real-world applications of blockchain, many already in use by organizations focused on international development, offer far greater utility and cost savings. So there we go. All right, let's go down here if there's anything else. Something like this. Using blockchain in this way not only brings full transparency of the flow of funds from donors to farmers, but ensures compliance through automated checks with our AML software. Further, it enables the UN to automate a number of services. For instance, farmers can now speed up payments to their vendors with a click of a button on a mobile phone. Nowhere is the value and utility of crypto more apparent than in stablecoins, a type of crypto designed to keep its value pegged to a fiat currency or a commodity. Stablecoins that are backed by reserves that are independently audited could be a means that cut through bureaucratic red tape and enable anyone to move money across borders in a matter of seconds. I like to think I'm helping to support the ongoing digital transformation by sharing stories about the on-ground use cases of blockchain. Digital money is only becoming a more practical solution as the number of off and on ramps between crypto and fiat increases. An easy lesson to remember when surrounded by the snow-capped Swiss mountains. There we go. All right, then we have this. We already talked about that. Then we have Circle Ventures backs $4 million round for blockchain-based debt provider Obligate. The startup formerly known as FQX lets company raise money through debt securities. So everything that we've been saying, that with the rise of blockchain, the rise of tokenization, there's going to be so much opportunity for businesses, creators, for just individuals to make a source of revenue or a source of funds. Now we have National Australia Bank becomes second Australian bank to build stablecoin. The stablecoin will launch on the Ethereum and Algorand blockchain. That's good to see. Then we have the National Australia Bank, one of the 4 biggest Australian bank, has created a stablecoin, AUDN, which it aims to launch in the middle of 2023. And the purpose of AUDN will be to allow customers settle transactions on blockchain technology in real time using the Australian dollars. AUDN could also be used for several other purposes, including carbon credit trading. It's like the talk of the town. Overseas money transfers and repurchase agreements. The stablecoin will launch on the Ethereum and Algorand blockchains. The latter is a smart contract platform similar to Ethereum. A stablecoin, we know what that is, but it is considered to be more efficient and cheaper than the interbank cross-border payment solution SWIFT. In this case, the AUDN will be fully backed to the Australian dollar, and the money will be held by the NAB, which is the second major Australian bank to be involved in the creation of a stablecoin. Earlier, Australian New Zealand banking group teamed up with the crypto custodian Fireblocks to mint a stablecoin pegged to the Australian dollar. And Australia introduced token mapping to identify characteristics of all crypto tokens and how they are managed. And its central bank has started a pilot test to explore potential use cases for Australia's own CBDC, which is expected to be completed by mid-2023. In an effort to tighten safety around crypto, the Australian government promised last month to establish a framework for the licensing and regulation of crypto service providers in 2023. Nice. There we go. All right. Next one. Binance named counterparty in the FinCEN order against BitLazo. We know that. That's on the radar. Fireblocks enlists crypto protection firm CoinCover for third-party key recovery service. Fireblocks is, I believe, a custody service, and they're deeply tied up with the inner circle, if I were to say. And Fireblocks, which employs a clever key sharding technology called multi-party computation, encourages customers to independently back up their keys, combined with third-party disaster recovery services from CoinCover, one of the first crypto firms to work with Lloyd's of London. So we have custody being a very, very big deal. And these solutions are what's going to enable the institutions to pile trillions of dollars into this. All right. Lastly, to end this off, we got selling the top. Peter Thiel's VC firm made $1.8 billion from crypto. Founders Fund reportedly no longer has a big investment in crypto after closing down most of its 8-year bet. That's very interesting. Let's see. Sold a big chunk of its crypto at the end of March 2022 to a source sold that FT. The well-timed trade was made before the crash of algorithmic stablecoin. It's like they all, the inner circle knows what's going to happen beforehand. A representative for Founders Fund didn't return. Blockworks crashed. Let's see. He said at an event in Miami in October 2021 that he felt he was underinvested in Bitcoin. He also suggested that he had some hesitation in investing in it because he thought the secret was already known by everybody, then added that, I think the answers are still to go long on Bitcoin. Interesting. Then we got this. Crypto technology's impact goes beyond crypto technology. Token-based fundraising can help more than underserved markets, projects, and entrepreneurs. It can also help other new technologies evolve because blockchain and crypto is the backbone of this new fourth industrial revolution. If you even go to the World Economic Forum and their diagram that they got, literally everything, for all these other technologies to excel and to really become mainstream and kind of all connect together to make it reach its full efficiency, blockchain and digital assets and crypto are at the forefront, the core of it all. And let's go down here. If there's anything, I think that's it. So yeah, that's it, guys. That's it for the crypto newsletter. I will see you in the next video. We're going to cover tracking Davos on day 2 and 3. And then also, if you haven't already, hit the subscribe button and hit the notification bell and come join the Discord. I'll put the link in the bio. Say what up when you get there. I'll say what up back. Looking forward to seeing you guys there, and I'll see you guys in the next video.